After everything that landlords went through during COVID, you'd think many would want out of the landlord business. Well, some shocking new statistics in this month's Homedex report may cause you to think twice before selling that rental. That and what's going on with inventory that will have a major influence in years to come for our markets. So stay tuned for the August Homedex report next. Hello, everybody. Welcome back. I'm Gary Massa with Massa & Associates, and thanks again for joining me on this Market Update Monday. We just got the statistics in, or the report in, for the September Homedex report, which again is for the August numbers. Again, we're seeing some really interesting trends through our markets here in San Diego. But before I jump into that, I wanted to talk about a few points that this report illustrated basically on the front cover that I feel like is going to have a major impact to our markets coming pretty soon. And it's something that we don't really talk about. First off, we're going to talk about rentals and how that market is faring and how it's going to be shaping our sales market here in the area, just nationally even. And then secondly, we're going to talk about inventory and what's to come in the years ahead. So stay tuned for the whole thing. First of all, just because I can't remember all this, I'm just going to kind of paraphrase from what the report said, these highlighted areas. But basically, the booming housing market has spilled over to the rental market, which has seen demand for apartment and single-family rentals skyrocket this year. Pause for 1 second. Again, we all know what happened over COVID. Landlords had a really tough time with, collectively, with a lot of people not being able to pay their rents, whether it was strategic or realistically they had a hardship. But the point being is a lot of landlords were left stranded, and a lot of them kind of wanted out of the business. And if you've been looking for a rental lately, you've noticed that there's no inventory on the market whatsoever. So picking this up, the demand for apartment and single family rentals has skyrocketed this year for sure, and there's no availability. High sales prices and inadequate supply of available housing has forced many prospective buyers to rent for the foreseeable future, meaning they've pulled out of the market altogether because prices are going just insanely too high. Increased demand for housing along with the improved economy has competition for rental units soaring, and landlords are taking notes, with the national median rent increasing 11.4% in 2021 so far. Now, again, that's according to the apartment list, which is a publication. Now, that's 2021 year to date. We're in September, right? So again, that's pretty shocking numbers that rents have gone up 10% already. Now, going back down to the bottom, so how I feel that the rental market being so high as well is that's going to push a lot of people into squeezing into other homes, buying something maybe smaller that wasn't quite the right fit for them, or maybe moving out of the area. I don't know, but prices are going up in both the rental and the sales market now in tandem. But that's great news for landlords who now might be able to make up that difference of what they may have lost in the years to come in terms of increased rents. So stay tuned, landlords. I know I have a lot of people calling me asking me to sell their rental properties just because it's been too much to handle. They're offloading a few, but keep that in mind. Now, the second segment of the conversation I wanted to have with you guys real quick, also illustrated in the front end of this report, is that inventory supply. Now, do you guys remember back 2003, 4, 5, 6, 7, 8, through probably 2005, they were just building a ton of houses. Everybody was buying. There's too much supply and prices were going up so high, which kind of caused the fall. Part of the cause of the fall of 2008 to 12. But during that time frame, there was no new homes being built at all, right? Which has kind of caused a lot of our inventory shortages in this current market. Well, get this. Now, housing starts in this market, like you'd think that they'd be building as many houses as they possibly could, which it was kind of starting to ramp up there between 2017, 18, 19. But through the pandemic, now housing starts nationwide dropped 7% last month, according to the Commerce Department. Single-family home construction declined 4.5%. Okay, while condos and apartment buildings were also down 13% in terms of building new inventory. Labor shortages, rising material costs, and supply chain setbacks continue to challenge builders, with some projects temporarily paused due to availability and cost of materials. So we've all seen like the price of lumber increase, the price of copper, electrical items, basically everything has gone up, and it's put a pause button on building new homes. So if we're not building new homes right now in 2020 and then 2020, because of 2021 rather, what does that housing start look like in 2022? And if our inventory is already at like the lowest amounts ever, we're going to have to rely on existing home inventory and a bare minimum of new home inventory to relieve that supply issue for home sales. So again, I feel like going into the next couple of years, maybe through 2025, it might take them to recover actually starting to build more homes. This is nationally, not so much San Diego. We don't have a whole lot of land here, but at the end of the day, that's going to keep our inventory levels really, really low. So just a couple of thoughts that I thought were really, really interesting. Now let's go ahead and jump right into the August Homedex report. Okay, so first off, here is the overview, and we're gonna basically go into each of the indicators. We're gonna go over the new listing, pending sales today, days on market. That's a big indicator that we're watching, and the price of the sales price versus original price listed. That's a big indicator that we're watching, in the month supply of inventory. All right. So first and foremost, here's the new listings. I don't know, hopefully you guys can see some of the numbers here, but what we're looking at right here, this is like a 12-month running tally of like where the inventory, the new listing inventory numbers have been. We've been on since December through June, we've been on an increase of more and more supplier new listings coming to the market, which topped out at 1,472 new listings in June of 2021. Now, the last 2 months, we've been trending downward with 1,387 in July and 1,131 in August. Okay, so you can kind of see that drop in inventory. Now, again, we're going to start to see some trends today that's starting to show some reverse of the market, right? But at the end of the day, this is also a seasonal pattern that you start to see every single year on the same time. Start to see these in the fourth quarter. We start to drop off of new listings. Typically, like the third quarter, late second, third quarter is when we start to see a lot more of that activity. Same thing here. We're seeing in the pending sales. We were on a run from December through June of pending number of sales increasing. So more sales happening. The last 2 months, like July was 1,078. It went down in July from June, but then back up in August. But we're in August at 1,134 pending sales. That's still quite well below like what we were actually doing in March, April, May, June. So we're still pretty well down in terms of trends. Okay. Now getting into the number of closed sales, again, same thing. We've been ramping up since January with the number of closed sales in the market. And then since July, it's been going down. And since June, it's been going down. July, we had 1,223. And August, we had 1,079 closed sales in the marketplace here. These are all single family homes, by the way. Now, again, the days on market, this is an interesting trend that we've been watching because things have been going so fast. And every single month, it's been getting, faster and faster and faster. Since June, May was 16. June, we had 12. July, we had 14 days. And now it's 15 days on average on the market for single family home in North County, San Diego. So again, we're starting to see the market slow down ever so slightly, but at least it gives you at least a minute to look at the property, go out and see it a couple of times and make an educated buying decision instead of getting 15 minutes to see the house and make a $1 to $2 million decision on buying a home and you got to submit an offer 15 minutes later. Yeah, so it's kind of a good thing, but just knowing the market is slowing down a little bit. Now, median sales price. We've been on really a 10-month streak of median sales prices increasing, okay? Now, it was, coming out of, let's just go back to April, 940, May was 950, June was 960, July was 975, and August is 949. So we've seen that price for the first time in 10 months start to reverse back down 25,000 on the median sales price from the month before. But you can also see is that as we're going into this kind of fourth quarter, these circles right here are like the September timeframe, basically this line September timeframe. You can see things start to level out and or decrease a little bit. So we're matching the trend even from last year from August to September, the median price point kind of taking a not a dip, but just pulling back a little bit. And again, in my experience, last 15 years, that's pretty well seasonal for this time of year. So we'll see what October brings. But the average sales price as well has been coming down steadily since April, when it was at $1.3 million. Now it's down at $1.238 million. It's been slowly stepping down like for the last 5-6 months. Okay, but you also see these jump around and kind of level off. So this is kind of normal behavior for this time of the year. It does tend to have a little bit more of a downfall line towards this season than last season. So we'll keep an eye on that. Percent of original list price received. Now, again, this is an indicator that I've been watching very closely, because again, a lot of people are like having to come in and be super competitive, overbid in the market, submit like crazy offers, 5%, 10%, 15% above, whether that's market price, list price, etc. And it's got a lot of people tired and kind of getting turned off from the market. But what's happening is either all those people that had all the cash and can just let the market run away with them, either they've all got a home or reaching the top of the threshold of our pricing and things are starting to level out. As that number comes back down closer to 100%, or maybe even closer to 97%, which was average previously every year, since then. But right now, we topped out in June at 105.6%. July was 104.6, and August is 102.9. So slowly starting to kind of come back down to that list price or market price offers on average for single family detached homes. We're not going to get into the affordability. Obviously, the affordability is its lowest as it's ever been on record. So we won't get into that too much. That's obvious. Okay, so getting into the inventory of homes for sale, there's two different indicators we have, like the actual number of homes that are selling each month and the month supply of inventory. The month supply of inventory is actually like an absorption rate number, like how much inventory versus the demand and how much is being absorbed in the given month. Now the inventory numbers, this is telling kind of an interesting story, because we're actually seeing inventory, the number of units go down. So March we had 1259, April we had 1285, and again these numbers are red because from report to report they seem to kind of change. But I went back to the exact month in which it initially announced the numbers, and I filled in the blanks here because they just don't seem to match between any of the back reports. But anyways, we had 1239 in March, we had 1285 in April, 1316 in May, 1335. So we were kind of peaking out in May in the number of units on the market, but in June it started declining, 1235. July it's 1192. In August it's 1165. Now again, that's still the lowest number of units going on for sale pretty much in the last 12 months. So the point is, when you go here to the month supply of inventory, it was, we've been gradually stepping up in inventory for the last 5 months. So it started in April was at 0.8 months. We had 0.8 months in May, 1 month in June. It stepped up a little bit. July stepped up a little bit more at 1.1, and then August is still at 1.1. So our inventory month supply, the absorption rate is actually going up, meaning, indicating there's more supply. But as you just saw from the numbers, from the actual units, that's going down. So the question is the demand changing, right? So let's just keep an eye on those numbers as we get more data going towards the end of the year. Again, this could be seasonal as well, but a very interesting point to keep an eye on as we're looking at how the market's changing. So that actually wraps up the Homedex and this edition of Market Update Monday and the general North County Homedex report. Next week, stay tuned for the #1 most performing market segment in San Diego County and the zip codes that are performing the best in those areas. If you have any questions whatsoever, please put them below, text me, give me a call, but I want to hear from you guys. If you don't mind, like the video, share it with a friend who might need to see some of this information. And again, if you have any debate or questions, I'd love to talk numbers. As you can see, I kind of geek out on this stuff. Don't hesitate. Leave a message below. We'll talk to you soon.